warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I am Grace Agbarago. It's Wednesday, the 28th of January. We thank you for joining us at this time on the show.
All right, let's tee off with your news now. As global interest rates stabilize and capital flows gradually turn back towards emerging and frontier markets, sub-Saharan African issuers are facing a changing debt landscape ahead of 2026. Sovereign issuers, investors, and financial intermediaries examine the outlook for Africa's debt capital markets, from macroeconomic drivers and funding strategies to investor sentiment, policy reforms, and market innovation. Here are excerpts.
Put it in a nice bow. About 65% firstly local, so that's all SA. So let's say 2/3 local, 1/3 offshore, including Africa XSA. Africa XSA makes up about 4% of that, and mostly we've been, maybe for the last 10, 15 years, we've been in listed equity, and that's been interesting. The last 2 years, very strong performance, so quite happy with that. But really, I'd say the years before that, middling to poor performance, I think, Africa XSA equity. We then kind of relooked at our strategy and thought, okay, well, let's actually diversify that investment a bit, and then we invested in fixed income, and we do so really in two kind of ways: listed fixed income, which we manage internally, and that really looks at Euro bonds, and specifically really sovereigns, and then a little bit of a sleeve in private credit as well, which actually is how I think I met Enco and Saad, as we're looking for a potential manager on that front. And so that's roughly the story. Let's say about 4% in Africa XSA. And so far so good. I think the last 2 years have been good, both in equity and in fixed income. So our principals are happier as that story turns around. And I just totally agree with you there, Christopher, that in our minds we think we want to invest in the continent. We want the continent to do well. We ask ourselves questions often about whether that's perhaps too narrow. We should broaden that and make it not only Africa XSA but potentially even frontier markets. And so we've started thinking of Africa within the context of frontier markets, but nonetheless remain invested.
In Ethiopia, Zemen Bank has reported a strong first half performance, posting a gross profit of over 5 billion birr. Total assets reached 106 billion birr, surpassing the 100 billion birr milestone, while customer deposits stood at 80 billion birr and paid up capital at 14 billion birr. CEO Dereje Zabene described the results as a significant improvement year on year, emphasizing the bank's focus on technology-driven, customer-centered services. In Zambia, President Hakainde Hichilema has pledged to pursue responsible mining, warning that the country's mineral wealth must not become a source of conflict. Speaking at State House while receiving several foreign ambassadors, Hichilema said Zambia is working to better manage its gold resources, drawing lessons from Ghana, and confirmed that Ghanaian President John Mahama is expected to visit soon to discuss cooperation and investment. He also called for stronger economic ties with Germany and Japan, thanked them for support during Zambia's debt restructuring, and highlighted opportunities to deepen partnerships with Namibia and Colombia. In central banking news, the Central Bank of Ghana has cut its key policy rate by 250 basis points to 15.50% as confidence grows around the economy's outlook. Speaking at the MPC press briefing, Bank of Ghana Governor Dr. Johnson Asiema said the headline inflation is expected to align with the medium-term targets, while economic growth remains strong into 2026. Let's listen.
The IMF projects global growth to remain steady at 3.3% in 2026. Global headline inflation, on the other hand, has gradually shifted towards central bank targets. This reflected a sustained drop in oil prices, lower food prices, declining underlying inflation, and anchored inflation expectations. Based on these developments, Global financing conditions have eased considerably in both advanced and emerging market economies, supported by expectations of policy easing by central banks, increased risk appetite, and the depreciation of the US dollar. These global dynamics are expected to be favorable for the domestic economy going forward. Now, on the domestic front, growth recovery gained momentum in the year. The latest data from the Ghana Statistical Service showed that overall real GDP expanded at an annual rate of 6.1% during the first 3 quarters of 2025, relative to 5.8% during the corresponding period in 2024. Similarly, non-oil GDP grew by 7.5% from 5.8% over the same comparative period. The growth outturn was mainly driven by the services and agriculture sectors. The bank's Composite Index of Economic Activity, or what we call the CIA, registered further improvement in the last quarter of 2025. The index recorded 8.8% growth in November 2025 compared to 1.5% growth in November 2024.
In the meantime, Moody's has upgraded Kenya's long-term foreign currency sovereign rating to B3 from CAA1, noting that the country's near-term default risk has eased. The rating agency noted that the upgrade reflects stronger foreign exchange reserves, a narrower current account deficit, and more stable shilling developments, easing balance of payments pressures and expanding government funding options. In Nigeria, the International Finance Corporation has outlined key programs aimed at boosting private sector growth in Central Africa and Nigeria. The IFC says its interventions focus on expanding access to finance, supporting infrastructure, and strengthening SMEs to drive job creation and economic resilience across the regions. Let's listen.
So what the IFC does really is it engages with private sector directly, not through government, but directly. We provide a number of interventions and supports, pretty much like a business. We operate like a business, and whatever flows to our bottom line goes back to finance what we're able to do in other countries. So we provide loans, so debt financing to all sectors of the economy, whether banks, manufacturing, agriculture, services, infrastructure, disruptive technologies, pretty much anyone who has a legal balance sheet, audited, and pays their taxes, we are willing to step in and provide some debt finance where we think it can help you get to your next objectives for your business growth. But not only that, because while debt financing is very important for providing operational expenses, working capital, helping you meet your expenses for operating your business, sometimes you need to expand your equity base. So we also provide an equity, so to help you grow as a business, always taking a minority position, and to achieve that growth potential you have, whether it is to expand more in the country you're operating in, whether you want to go transglobal and operate in other countries, whether it is to bring in new elements of your business, new product lines. We're happy to see what your business opportunity entails and see how and if we can work with you as an equity partner. So what the
In other news, Dangote Industries has appointed MTN Group's Chief Executive Officer, Ralph Mupita, to the board of Dangote Fertilizer Limited as the company pushes expansion plans and prepares for a potential stock market listing in Nigeria. The appointment, confirmed by Dangote Fertilizer Management, strengthens the board with telecoms, finance, and governance experience as Aliko Dangote seeks to deepen agricultural value chains and attract long-term institutional investors. Finally, on News Now, Mr. Price Group has reported a strong third quarter performance with retail sales up 3.6% to 15.1 billion rand for the 13 weeks ended December 27, 2025, driven by strong December trading and market share gains in South Africa. Sales growth accelerated in the final 6 weeks, rising 3.8%, with December itself up 5.9% against a tough comparative base, outpacing overall market growth, according to the Retailers Liaison Committee. The update comes amid scrutiny of Mr. Price's proposed 9.7 billion rand acquisition of German value retailer NKD Group, which contributed to a December share price drop of over 15% and a year-to-date fall of nearly 42%. I am Melissa Enoch, and that's it on News Now this Wednesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us a market update.
One thing I loved about the report and the issues that it highlights is it really shows how the importance of technology, the digital transformation, particularly with regard to financial inclusion that has taken place in the region over the years. I think, honestly, of course, I'm biased, I'm talking my book, but really difficult to think of a region that has been impacted as much by digital transformation as Sub-Saharan Africa has. Particularly in the area of digital finance, leapfrogging we've seen in action. I remember I was based in the mid 2005-6 in East Africa, in Kampala, and I remember when M-Pesa was just being rolled out in Kenya, and there came a point when, I don't know, about 10 years ago, when I was in Nairobi, wanted to make a payment and I couldn't because I didn't have an M-Pesa account. I had to scramble to exchange dollars for shillings to be able to make payments. And this was not quite, it's outside Nairobi. So the penetration of digital finance, technology use at all aspects of life is really just incredible. It has allowed leapfrogging, it has allowed, it has had an impact on social life, political life, way more, including the dissemination of information.
A warm welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there again, Grace. How are the markets wrapping up today?
Thank you, Melissa. And let's take a look at how the markets traded today, starting off with the equities. The NGX All-Share Index was down today by 0.33%, while the BROVM edged up 0.10% to 356.82. The Nairobi Securities Exchange gained 0.39% to 195.71. In South Africa, the Johannesburg Stock Exchange advanced 0.91%, and in North Africa, Egypt's EGX 30 slipped 0.10%, while Morocco's MASI jumped 1.73%. Let's do a quick round on some of the Pan-African currencies. The Rand firmed 0.10% to 15.87 against the US dollar. The Egyptian pound weakened 0.26% to 46.87, while the CFA franc eased 0.85%. The Kenyan shilling was flat at 129. The Moroccan dirham slipped 0.04%, while the naira strengthened 0.71% to 1,396 naira 73 kobo as at 13:27 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude rose 0.80% to $68.11, while US WTI advanced 0.95% to $62.98. Natural gas fell by 13% to 6.05 cents, and RBOB gasoline climbed 1.02% to $1.88 as at 13:23 GMT. Finally, to soft prices. Cocoa slumped 5.62% to $4,184, while coffee fell 2.75% to $357.15. Cotton gained 0.72%, palm oil increased 0.83%, and sugar declined 0.88% to $14.70 as at 13:26 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets traded today. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.